Give it all to you and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear.
Hi, everybody. Good evening. Good evening. All right. Good evening, ladies and gentlemen, boys and girls, brothers and sisters. Here we are once again. It is Sunday night, 8 o'clock Eastern Time, May the 26th, 2024. I see a lot of people still joining us here. Come on in, gang. Lost room at the front. By the way, thank you very much for joining us right here on a Memorial Day weekend. Yeah, I know you could be out there doing something else, right? Maybe enjoying barbecue burgers and beer. Getting ready for the summer as we start things off here. Just getting a drink of water here. I've been talking all day, so excuse me. All right, come on in, folks. Okay, lots of new names here. Ooh, yeah, good to see everybody here. Yeah, wow, lots of old familiar names as well, and some people who just love to join us no matter when we have the session. I think if I have it at 4 in the morning, then these people are still going to be on. Okay. Thank you for your loyalty. Yeah. Okay. All right. Let's get started, folks. Let's get started here. I'm going to just click on this button there. Yeah. All right. Well, welcome to DayTradeSPY.com's weekly fireside chat. This is Introduction to Trading Weekend Review for Sunday, May the 26th, 2024. And my name is Hugh. All right. We're going to be going slow here today. Please use the questions box. You'll find a little questions box icon on your Zoom dashboard. Click on that. I am the only one that sees that, so go ahead and see what we want. Excuse me. So let's take a look and see what's going on here. Again, the questions box. Now, this is not going to be a session where we're going to, get into personal trades necessarily. It'll be sort of a general weekend review, introduction to trading, but I'll take a look at some questions, and if I can help you, I will certainly will. So, all right, if you're new here, please let me know. All right, yes, Bob, thank you very much. Bob, the math guy, gotta love this guy. Always ready for a joke. Hi, my name is Hugh. How do you do? Fine, thank you. Okay. All right, gang. By attending this webinar, you fully understand and accept the financial risks involved in trading securities. I'm going to give you a couple of seconds here to read this on your own. All right. So I will be quiet while you go through and read this and get to know what the disclaimer is here to keep the lawyers happy. All right. You alone are responsible for all your own trading, and past performance does not guarantee future results. All right. Let's move on here. Meet your host. That would be me. That would be me. And I don't know if the lighting is any good this way. I'm kind of in the dark here. So I think if I do this, if I close the blinds back there, then the lighting might be a little bit better. I think it's going to be a little bit brighter. Let's just take a look. Look at that. Yeah, as I close the blinds, the light turns into a little bit better on my face. Okay, sounds good. Anyway, listen, there's Aaron. He's got the day off here this evening. I don't know. He might show up, but I don't think so. I gave him the night off. I told him, I said, look, it's holiday weekend, and go ahead, take the night off. That's fine. I got it covered. Anyway, so my name is Hugh, and look at most of my experience comes from the School of Hard Knocks, and I took all the courses, came back from the from corporate America when my own financial advisor knocked out half my account. That's when I realized I have to learn how to do this myself. And that's when I actually really learned a lot of stuff. I've been trading thousands of people internationally since 2010. And looking for short-term breakouts, small daily gains, multiple times. Just go for a couple of cents, a few percentage, in and out, in and out, in and out. That's the way I like to trade myself. I know some other people like the more swing trades, a little more longer term. That's fine. Everybody's got their own style. And that's what I do is I recommend that you find your niche, your style, your whatever you want to call it, and refine that, right? I'm not suggesting that our strategies are perfect for everybody. Everybody's going to have their own little, their own little preference. So I like to combine fundamentals with technicals, and I like to also take note of the psychology of trading. All right, make sure that I get the emotional sentiment of the market, right? Because sometimes the market just simply gets in a bad mood, right? And the market just goes down because we're mad. We're mad. We're going to sell, sell, sell. Okay, that's fine. It's like a little kid. Let it have its temper tantrum. Let it go down. It'll find some support. Come back up. Always does. If the S&P ever goes to zero, we got bigger problems to worry about than SPY. And that's what we trade. SPY. SPY is the spider that that follows the top 500 stocks. All right, S&P 500. All right, now some people are going to say that I'm better looking than Aaron. That's of course according to a recent survey. Um, oh, we try to have fun here. Anyway, Aaron now, he's my partner in crime in the trading room. Good guy. Opened his first trading account when he was in high school. Mastered that deep dive technical analysis. As a matter of fact, he used to be a technical analyst for $150 million commodity fund. He was the guy. He was the technician, and he identifies high probability trades. So what happened was uh, we are now in our 15th year of doing this. Okay, day trade spy, which is hard to believe. They said, well, they said that will never last, and we said we'll never last. We're almost supposed to have done this for a month or two, maybe a couple of weeks. But as it turned out, the thing just ballooned, mushroomed to our beyond our wildest dreams. I guess about a year and a half ago or so, Eagle Financial Products bought us out. But here's the thing: they lured Aaron over, and that was a good thing because Aaron's a very smart guy. So we combine his indicators with my indicators, and hence the saying, "When our indicators unite, our trades ignite." And they go through the moon, right? So you want to get in on those. Anyway, but he has the night off tonight, but he's in our trading room every morning. So, all right, listen, a couple announcements just want to make here. Well, one announcement anyway. Spy on the Market. This is our weekly newsletter. Gets sent to your inbox every Thursday morning. Make sure you subscribe to this. You want to get this, all right? And it's a free newsletter, and it's a brief 3-minute read, light, relevant, and entertaining even. Some people say all you have to do is just subscribe. Go to daytradespy.com, and you're going to get this pop-up here, which is what that is. Leave your email address there. That's also going to put you onto the Spy on the Market. Spy on the Market list, and you're going to get that delivered. And it's actually a lot of people really like it. Okay. And this week's topic is going to be old traders and bold traders. There are old traders and there are bold traders, but there are no old, bold traders. And I get into the reasons why. And I think you'll find it quite entertaining. So again, just go to the website DayTradeSPY, and when this pop-up comes up, leave your email address there. Get your free report. Excuse me, DayTradeSPY's tips, tricks, and traps from the trenches. And you'll also get the subscription to Spy on the Market. All right, tonight what we're going to do is we're going to talk a little bit about last week, preview of next week, answer some of your questions. I'm going to tell you about DayTradeSPY Signal and why you need the signal if this is what your preference is. Okay, all right, let's move along here. I see a lot of questions already coming in here. Indy 500. Hi, Art from Rhode Island. Good to have you, Art. And thank you for that, Rob C. Oh my gosh, a new one here. In just 2 weeks, his account has grown 50%. Doug, Dancing Girls got me tied up. I think I've got the Dancing Girls later tonight, so don't go too far. I'm pretty sure we got those here. Okay. Question here, do I have a sense of where SPY's going to go? If it's going to go back to 533 before Friday. Had a good week on the pick of the day, Mike, but took a little bit of a beating on Thursday. We'll talk about that maybe a little bit later on. Zoom user. Okay, more often than not, pick of the day skyrockets at the opening. How do we get into an entry price close to the opening price. Okay, we'll talk a little bit about that. Like your haircut, Hugh. Thank you very much for noticing there, Alexi. Okay. I got my ears lowered, is what it is. Yeah, I was getting a little long. I thought, I'm going to cut it a little short because summer's here. I'm just kind of going through some of these questions here. Still haven't been able to get the news that I went to your site. Listen to my email. Really, Mike? Okay, I am going to click on that your comment there, and I'm going to send that down to the boys. And say, boys, get over here. You need to address this issue. There, I'm going to send that down. All right. All right, so that's what we're gonna do. By the way, if there's anybody new on who wants to stick around later for the for the for an options primer, if you don't know anything about options at all, right? If you've never heard of these things or you're not sure what they are, I've got a little bit of a primer for you at the end if you want. If you don't, that's fine too, because we can just call it an early night. In fact, I'm going to segment this off anyway. We're going to stop it after the questions and answers period and the day trade spy signal. A little promotion on that one here, but anybody who really wants to stick around might give you a bit of a primer if we have enough people. So let's move along. Weekend review. What did we do here? This is what the chart looked like. This is an hourly chart. Every one of those candlesticks, those red and green candlesticks, they represent 1 hour in time. And here's what happened on Monday. Going to quickly go through this. Excuse me here. Monday was a low, no news day. Not a whole lot happened. The initial rise bounced off major resistance at 531, some profit taking. I believe that was a 50% tile retracement on the Fibonacci, not really sure. And then it came back down. Not too far off where we opened. We ran up, came back down, and it was kind of a relatively flat day. Same with Tuesday, another low, no news day. And I just want to do a little correction here on the low. There we go. That's L-O-W. L-O-W. There we go. All right. Low, no news day. Several Fed members spoke actually on Tuesday. And actually, we had some bounce. We had both hawkish and dovish Fed members speaking on Tuesday. And I understand, from technical indicators, we ran up, came down, and found some support around that 530 mark, pushed it back up. Anyway, we closed up around that 531 level once again. Wednesday was a little bit different. We had some elevated volatility on the Fed meeting minutes that was released at 2 o'clock on Wednesday afternoon. And the market just tanked, get several points, found some support down around 528.5, pushed it back up by the end of the day and into the next day. My goodness, the pre-market, we hit an all-time high of $534 on SPY. And then came the unemployment claims report at 8:30. We also had S&P Global Manufacturing PMI and also the S&P Global Services PMI. All of them were higher than forecast, which was inflationary. And SPY tanked, picked up some more stragglers along the way to keep selling. We lost about 10 points on Thursday. And we found some support just under 525. Brought it back up on Friday, and we're able to recover about half the loss. We had durable goods orders, consumer sentiment, that also raised SPY after Thursday's meltdown. That was on Friday. So it was an interesting day for sure. I made money on Friday. I'll show you in a little bit. I love those days when the market goes down, believe it or not. Those are the days I love because I shouldn't say always. I tend to make money on those days. For the longest time, I've been making money on those days. I don't want to say always because I'm sure there are days when I didn't. But anyway, I don't like to use superlatives. Let's look at the seasonal chart. For those who are not familiar with this, that blue line at the top is where SPY is now, and the red line at the bottom is a composite of the last 5 years closing price on the daily charts. So let's just zoom in on that one here. And if we take a close look, microscopic look down here, we'll note that SPY rose about 3 points in the last week, and it rose about a 3-point, had a 3-point rise in the week coming up as well. All right, so not to say that it's going to follow suit, but if SPY behaves anything like it did the last 5 years, we just might see a continuation to the upside. All right, continuation to the upside. And we'll take a look and see what happens here. So what brought last week's market down? Let's take a look here. After 4 weeks of rallying, SPY took a little bit of a breather, but it's still up here today. That's some consolidation after a strong move. That's actually a healthy sign. And overall, the momentum continues to be led by those large cap tech stocks. We had NVIDIA report earnings the other day, and that certainly helped the tech sector quite a bit, as a matter of fact. Inflation potentially moderates further. Earnings growth continues to deliver. Markets experienced a modest 5% correction in April, but there may be more this year, although it could be a little choppy, all right? SPY did pay more attention to inflation in the path of the Fed rate cut this year as the Fed's push back on cutting rates. If that it does not cooperate, we can see what happens. Inflation is still going to likely be more moderate in the coming months, although it might be staggered. So I think it's going to step. It's going to be a step kind of a move, slowly as the economy continues to chug along. We're going to see choppiness in the market, depending on the Fed's reaction to inflationary numbers, because it's all about interest rates. Inflation causes high interest rates, which causes markets to go down. That's just the nature of the beast. So all other news is not that important. Doesn't matter. Nothing else really matters. That's really what it's all about: interest rates and inflation. This week, SPY was pretty flat. All right, as a rule here, SPY was at the S&P, and year to date still up 11.2%. Nasdaq's up 12.7% year to date, and the Dow is just under 4%, still running here to the upside, although it did lose 2.3% this week here. The week ahead, let's take a look at this young lady as she's presenting here. Obviously, the markets are closed tomorrow. We're all going to be just kind of relaxing and enjoying the day off. We have a consumer confidence report coming up on Tuesday, Richmond Manufacturing Index on Wednesday. More news on Thursday, unemployment claims, pending home sales, and preliminary gross domestic product. I just want to make another change here, put that into a comma instead of a period. There we go. Let's get this corrected. And on Friday, a very important number, PCE, personal consumption expenditures. This is actually a very important number that the Feds are going to be looking at. They put a lot of weight on the PCE, right? Personal income, personal spending, I think University of Michigan. Chicago Purchasing Managers Index is also going to be reported on Friday. So what does this mean to you? Well, here's what this young lady is telling us. Volatility could be moderate on Tuesday and Wednesday, high on Thursday and Friday. All right, high on Thursday and Friday. So could be somewhat range bound earlier in the week. Greater opportunities near the end of the week on Thursday and Friday. Excuse me here. So that's kind of where that is. All right. So the idea here is when the volatility is moderate, the idea is to aim for, humble, moderate gains on days like that. You may not get the wild swings. So sometimes if you're looking for, I'm going to shoot for a 10% gain, well, you may get it, but it might be a struggle. You may not get it. It might reverse. It might head fake you out, that kind of stuff. Thursday and Friday, depending on the news and depending on some volatility issues and momentum on either direction, of course, which is going to be fueled by the news, you can probably make some more money on higher volatile days like Friday and Thursday and Friday. All right. So we're going to leave her away and take a look at what I did here just on Friday. Now, I'm not supposed to trade. Actually, doctor's orders said, don't trade you. I don't want you trading real money. I said, okay. But I still do a little trading, High blood pressure does not facilitate my trading. They don't think it's a good match. And I checked it earlier today. It's something around 148 over something. I don't know. I should take a look at it again. Nah, I think I just can do that. Let me just pull this up here. My blood pressure, my trusty blood pressure machine right here behind me. So I'm going to just do this right now. Let's do it. I do this every morning. And I don't know, I feel okay, So sometimes, you just got to say to the doctors, you're not in my shoes. And You're coming down from 178 or 180 or 185. 145 is not bad, is it? But they want to get it back in that 120 range. So I'm going to just see what happens here. I'm just going to pull this up here. And while I'm doing that, I'm going to analyze these trades I did on Friday. This is real trades. This is from Tasty Trade. All right. And those of you who know, Tasty Trade does not have SIM account. Their accounts are real money. And this thing is still inflating here. Okay, hopefully we're going to get some good numbers here. I like to get the good numbers, then I stop it. If I have bad numbers, then I do it 3 times, and then I take the average. But I'm going to just see what it is now, and I'll show you what it's going to be here. Okay, where are we coming in here? I better be quiet. I'm supposed to relax. Maybe. Okay, yeah, here it is. 146. I'm looking at it. 146 over 98. You know what? Yeah, it is what it is. I'm gonna go back and show you here. I think if I start the video, will that work? I don't think it'll work. All right, here, can you see this? Here it is. I don't know if you can see this or not. I'll take a look here. 146 over 98. I just tested it. All right, there we go. So stop video. Okay. Oh yeah. So anyway, I did do some real trades on Friday. I didn't announce them. Okay, I don't announce them because my trading is a little bit different than what I announce in the trading room. So when in the trading room, there are a lot of new people, a lot of novices, neophytes, And what I'm trying to do in the trading room is give a little more safety, a little safer trades. I will sometimes take more aggressive trades on my own because I'm okay with the risk. All right, I'm okay with the risk. My first trade, I got in at 935, and I got let's see, I got 16 cents in 45 minutes out of 1020. Hung around from 274 to 290. Trade number 2, by the way, this first trade was next Friday's expiration, which is a safer trade. But then what I did there, because I already made some money here, I took a gamble on same day expirations, May 24th. May 24th. So this was same day expirations based on our indicators. I jumped in at 99 cents. And in 3 minutes, it ran up to $1.20, and I took my profits there of 21 cents. Trade number 3, I got back in at 1027 for 67 cents. And I got out at 80 cents, so picked up 13 cents in a half an hour. Now, I didn't tell you how many options I bought in here, okay? That I'm keeping close to my chest, okay? Because I don't want people to think that, well, you're trading a lot of options and I'm not in that class, or I'm trading 100,000, you're only trading 30,000, or that kind of stuff. So I leave out how many contracts, but had these only been 10 contracts each, which I think is probably in line with a lot of you out there, they're probably just trading 10 contracts. That's fine. Trade number 1 would have yielded $160 on an investment of 2740. That's 5.8%. Trade number 2 would have given you $170 on an investment of 990 for 21.2%. And trade number 3 would have given you 19.4%, $130 gain on an investment of $670. Altogether, $460, real money, by the way. This would have been real money. Annualized, that's almost $120,000 a year, which is more than twice the average U.S. salary. All right, that's not bad. So if you did only 5 contracts, you'd have come in at pretty well the average, right? The average of the U.S. Salary. But here's what I like about it: I was done by 11 o'clock in the morning. That was it. That's it. Wrap it up. Go home. Go do something else, right? And that's what I like about trading. Trading, you call the shots. You create your own wealth, and you finish early. Finishing early not only made some money, you can actually pretty well, you're pretty well in control of how much money you're making. I mean, you have a lot of control over your income, but also you have control over your time. And to me, at this stage of the game, I'm 69 years old. I enjoy time off. I can go hang out with the grandkids, go do something with my wife. I could, go do some of my hobbies, just relax, go, hang out with friends or whatever I want to do, right? And that's what I enjoy doing. So And that's what I like. That's the beauty of trading. You get your life back. You get your life back. None of this trading hours for dollars or working for the man or whatever you want to call it. And that's what I did. So, and as long as I don't tell my doctor, and he doesn't have to know, right? I notice he hasn't been coming online here, so that's a good thing. So maybe I should have checked first to see if he's online or not. All right, let me just take a quick gander here to make sure he is. Yeah, I'm sure if he is, he's going to say something, or he's going to call me in for for an appointment. They'll say, okay, here, I want to talk to you here. You know what? I don't want to, see you in the hospital with a stroke or a heart attack or something. I'm just kind of scrolling down the numbers here, the roster. We got a lot of people online here. My gosh, I'm so impressed with you guys here. There's a holiday weekend, and here you are. That is really, really impressive. Thank you all. Gosh, now I know why I love you guys. You're so loyal. I say guys, by the way, I mean gals too, right? I like it when women trade, Um, the statistics show that actually women make better traders. I don't know why there are not a lot more women online, but there should be a lot of women online here. So maybe they just don't like my style. Maybe we just haven't told them. Anyway, I'm going to give you the 2-minute tutorial now. Here's the 2-minute tutorial. So get this question every now and then here. What's the relationship between volatility and price movement? Volatility and price movement. Well, the greater volatility, because you hear me talking a lot about volatility, right? The greater volatility options on options means there's higher option prices. The price of options goes up, and it gives you more opportunity to make money. But there's also higher risk getting caught in the crunch. By that I mean this. Let me see if I can pull up my an example here. This is an example. And I'm using TD Ameritrade, TD Schwab Thinkorswim. This is Schwab Thinkorswim. So I like, let me go back to SPY. And I've got this here um, under the trade tab here and under implied volatility. Now this is what I'm looking at, this implied volatility. So I've got calls on the left, puts on the right for those who are not familiar with Thinkorswim. Okay. Volatility, I kind of like it. I really prefer somewhere between 18 and 20%. That kind of gives you a good balance between risk and reward. When it's really low like this here on the call side, 8.64%, on the put side, 8.86% here, the at the money options. The at the money, that's the line between the gray and the black background. That's where SPY is now, 529.44. So that means the 530 on the call side. That's the option I would be buying right now if the market was open, perhaps. Or if it's puts, I'd be looking at the 529s. Okay. But that's what I'm looking at. So, excuse me here. So when I see 8.64%, maybe rather than going for a 6, 7, 8% profit, I might look to be happy with 4 or 5%. Because the option may not move quite as much. Okay. But what you're going to get is lower option prices. Now here it is. I don't know when this number probably would have come out Friday afternoon. Okay, because everything comes to a halt on Friday afternoon when the option market closes at 4:15 p.m. Eastern time. You can see how it's about $2 here for this 530 strike price, 198 by 201. If the volatility is higher, let's say it's 18% or 20%, this option might be, I don't know, 250, 280, something like that, right? But because the volatility is lower, so is the option price. Now, if the volatility is really high, then that option price is going to be quite a bit higher. And here's the thing. It's okay if you buy it at the higher price because you're going to hopefully sell it at the higher price, but you got to be careful because if they bring the volatility down while you're holding the option, the value of your option also drops. And let's say the value of your option drops 50 cents. Well, it's not just 50 cents on the stock you have to divide the 50 cents by the delta, which is say around 50. That means the stock, right? 50 divided by 50 is $1, right? 50 divided by 0.5 is $1. So that means the stock must rise $1 just to get your volatility back. The money you lost on the volatility crunch. So what causes volatility? Well, news items cause volatility. So for the SPY, S&P 500, you'll get news items that are high impact news. For example, PMI reports. You'll see volatility rise a little bit on those. Even if it doesn't rise that much, you'll just see more activity, more things going on. You'll also see earnings season. Let's take a look at earnings. For as an example, we have DIX, and we don't trade options on. We don't trade stocks, other stocks like this. But I'm just throwing this out here as to what why some stocks might have earnings. I think Dix is reporting earnings. Let me see, when would that be? When would that be? May. Oh, I don't know when it is. I thought here May the 20. I thought it was Tuesday or Wednesday or something. What we have here, maybe it's Tuesday. Let me take a look here. Okay, when does Dix? I mean, that's just an example. Let's look another one here. I thought I saw Costco here. Costco is well, here's Dick's here. You see the volatility? It doesn't matter. I think that they're reporting this week sometime, but you see the volatility right here. And on Friday it was 100%, over 100%. Take a look at the option prices where they're at the money options, 850 by 920. So that's another thing when you have high volatility and you have high option prices, you're going to get a huge spread on the bid and the ask. So we got a 70-cent gap here on the bid ask on the at the money call option. Another thing is that you're going to get lower volume. How about on the put side? We've got 710 by 760, another 50-cent differential between the bid and the ask, and another 99, 100% volatility, low volume. To me, that's pretty scary. I don't know who in their right mind would want to trade that. Now, maybe there's a strategy to that. Maybe if you're an option seller, you'll find a sucker who's going to pay you $9.20 for your options. Maybe that's fine. But it's not something you want to get pulled into. Costco is reporting earnings. I believe it was Wednesday. Was it Wednesday? I just saw them here. Oh my gosh. Okay, Dick's is Wednesday. Costco, don't I see them? Costco is Thursday. You'll probably see the volatility rise between now and Thursday on Costco. All right. Now, here's the thing. A lot of people trade earnings season. They say, well, I'm going to buy as we get into earnings season. And when the earnings come out, I'm going to sell and that kind of thing, right? And it sounds good. But here's what happens. When they release the earnings, the event had just passed as to what the news was. Volatility rises into the news. And then when they release the news, good or bad, the volatility drops. And so often happens, let's say you bought calls on Costco and the option, and a lot of times, not always, but a lot of times what will happen is, okay, it's good earnings and the stock goes up, but you're coming in, you look at, you wake up in the morning, you see, oh, good, Costco's up, and you check your options, your calls, and you not only didn't make money, but sometimes you'll lose money. Why is that? Because they dropped the volatility. The volatility dropped. And this will often happen. So there could be good news there. And suddenly it's just like, oh, the volatility drops. And instead of making, a lot of money on the option, it goes against you. What else do we have? Costco. Dell is another one. Let's see what the volatility is on Dell. Dell is reporting on Thursday as well. Look at the volatility on Dell Computers. 110%, really? 112, 108. Again, volume's okay, but you've got some pretty tight, well, actually about 20 cents difference, but 40 cents, 60 cents on this one here. So 30 cents. I don't want to be into an option that's expensive, relatively low volume and compared to SPY on with a high, bid-ask spread. I want to just check something. I want to check NVIDIA for a second. Because NVIDIA reported their earnings this last week here, just out of curiosity. Their volatility is still relatively high. So let me see where they are. Okay, let's just take a quick look at NVIDIA as to what happened the other day. They reported earnings back in here. I believe it was May the 22nd. And let's just take a look at, say, 960 put option, call option, 960, 960 call option. I'm going to add that in on this chart here. Studies, add a study, compare study, and I'm going to bring up the study for NVIDIA. So the option NVDA 2405. What does it be? 24. Okay, 24th year, 5th month, 24th day expiration. So there's only gonna be 2 days in there. And that'd be a call. What did I say? The 960 call. Let's take a look at see what happened to the option on that. Now maybe this did shoot up. I'm not really sure. This is on the 24th. Let's go back a few days here and see if it was proportional rather. If I go time frame, set up a 1 minute chart for several days here. This time frame, 1 minute chart. Go back 4 days, say 5 days, 5 days. Actually, let's go 10 days, 10 days. So if you were buying NVIDIA, and I'm going to expand this here, and I'm not sure this is happening here, chances are that the option did shoot up because of the stock, the way it happened. So here you're seeing the option. Take a look at this. The stock price held up, but the option price dropped. The option price, when they suck the premium out, is very difficult. So over here, on this day here, May the 20th, which was last Monday, if you are tracking NVIDIA, right? If you're tracking NVIDIA, it was kind of following the stock price. But then it broke away over here at about 10:30 or so, 10:20, 10:30. The option, the purple line is the option price. The candlesticks are the stock price for NVIDIA. It's just as an example. We don't trade NVIDIA, but just kind of showing you the relationship of volatility and stock price. Broke away. And once it breaks away, it's very difficult to get the premium back. So the stock goes up, yeah, the option goes up, but as we go on, right, as we move on, if you're watching this, you're thinking, I don't get it. Okay, the stock price went down, but it came back up. But why is the option not going right along with the price here? So it's kind of catching up there. But let me just see if this happened here on the 26th. So on the 21st, now again, because NVIDIA shot up so much, I'm pretty confident that the option price did follow suit. Proportionally, that I don't know. I didn't buy it. So we had these option prices right around here. Okay. So the option price right near the end of the day was about $36.50 for the call option. The at-the-money call option is going to expire in 2 days. All right. So if it's 9.55 roughly the stock, the option price was about 36.50. Let's see what happened here on the next day when the stock shot up. Was it? No, it was not the next day. It was actually this is the day when it happened. Sorry, this is the day when it happened here on the 22nd. Okay, volatility increased. The value of the option increased. Look at this as we're coming to this. So this is what happened here with NVIDIA. As we're heading into the end of the day, near the last half hour, people started buying the option in anticipation of a really good earnings report. And that's why the option went up. Okay. Demand pushed the option up. So the option came to here about $34. $34 while the stock was $9.90. And I'm probably looking at the wrong. Probably should be looking at the 1,000. I should be looking at the 1,000. Yeah, let's look at the 1,000 option, the 1,000 strike price. That's probably a better barometer. Okay. So here it is. So the 1,000 strike price, the option shot up here near the end of the day in anticipation of good earnings, and it came in. So it was around 19, $19, roughly $19.20, roughly, right? And the stock was somewhere around 949, let's say 950. 950 for the stock, 1920 for the option. Let's just take a look and see what happened here the next day. Now, quite possibly the option shot up, and probably it did, because the stock just shot up so much. So the stock ran up to 10.40. The option, wow, ran up to $40. This would have been 100% on the option. $40. So congrats to those who made it. In this case, the option did follow the price. With NVIDIA, it did. Oftentimes, it doesn't. And oftentimes, what you'll get is earnings that are going to be reporting better than forecast, yet the stock drops. And if the stock drops, so does the option. Cisco is notorious for that kind of behavior. And I'm going to bring up here, and again, we don't follow. What I want to do is I want to change the this here to a daily chart. Daily chart. Cisco is notorious for these kinds of this kind of behavior. Take a look at this here. Huh. Right here where I'm showing you. On November the 15th, the expected earnings was 91.3. Right here in the little white box, 91.3. And the actual came out at $1.11. You would expect the stock to go up. You would expect the stock to go up, but instead the stock dropped from $53 down to 46. What is this? We get a $7 drop. The stock beats estimate by a lot. It beat estimates by what, about 20 cents, 20% plus, and the stock drops $7. So here's what happens a lot of times. A lot of times in the C class, when they have their conference calls, they start, saying things like, well, yeah, we had a good quarter, but we don't know if we can maintain it. There's a lot of competition. There's a lot of this, a lot of. So the stock goes down. And the option itself, now I don't have the numbers for the option there, but take a look at the option over here. And here's an odd duck. We have this option here. Let me see what this option is. I'm trying to compare. Oh, we're comparing NVIDIA. No wonder we're comparing the wrong thing. Let's see what happened to Cisco. The Cisco option, let's say the 48 calls. 48 calls, 2405. Would that be 24 calls? I don't know, 40, 47. Let's see if we can apply this. Click OK. Well, the option came down. The option followed the stock here as well. But again, volatility drops, option drops. If you're sitting in these, in these calls, let's say you bought these calls somewhere in here, $1.50. I'm not sure what the option valued, but you just lost quite a bit of money in the option itself. So that's why I don't do earnings trades anymore. I used to, but I got burned too many times on earnings trades. All right, so that's the reason I don't do. But I am going to restore the cells here and get back into. Actually, I'm going to restore my 3 charts over here. In fact, I'm going to do this, but I'm going to go back to the PowerPoint. All right, so you got to watch volatility. And here's the thing. If they take the volatility out of it and you lose on the volatility, more often than not, you don't get it back. So be very careful when the volatility is really, really high. All right. Pay attention to it. Do not leave your post. If you see the thing starting to come back down, get out of it. All right. Get out of it. All right. So let's take a look and see, get back to our PowerPoint here. Folks, we give you many opportunities every day, how to spot them, how to trade them, and that's what we do. So now I want to talk to you about the DayTradeSPY signal. We don't talk about this very often, but this is actually a really cool service that we have. And it doesn't cost much to sign up, because what you get for it is a really, really good tool. Ideal if you are not able to watch, for example, the charts all day. If you're an active trader, you really like to trade a lot, this is a pretty cool thing to get into. The signal. It's relatively new. We just started this, I think, in November or something, November, December. And it's a very popular program that we have. So what happens is you give us your cell number and, of course, your email. And 3 to 5 times a week, you're going to get a signal, the actual option, particular specific option, which you should, looking to buy as soon as you get the signal. And it's texted to you on your cell phone and also emailed to you. And you'll probably get it on your text sooner because obviously email servers could be delayed. But buy it within the first 2 minutes of getting the signal. Then immediately buy within the first, okay, here I need to change another typo. Okay, there you go. So you want to buy this within the first 2 minutes of receiving the signal. And then again, it's a very specific option. No analysis required. You just buy it. All right. And then you set it up for sale for 5% profit. All right. More if you're tracking our trades tracking the trade using our system, you can actually usually get quite a bit more than just the 5%. We use 5% as a standard by which to measure success. A lot of times when you go with services, they'll say, "Oh, well, it went up 2 cents, so therefore it's a success." Well, guess what, pal? It's not, because I would have sold it with a 2 cent gain. But I hate it when they do that kind of stuff. So we have a certain criteria that it has to meet to consider it a success or not. In this case, the SPY signal has a 5% gain. So we expect to make 5% on that trade. Now, if the goal is not reached the same day, you're going to sell it at the market for close. Now, the option that you're going to be given has plenty of time in it, so therefore it's highly unlikely your option is going to go to zero. All right, highly unlikely your option is going to go to zero. In fact, we even tell people, listen, if it goes down to 40% loss, take the cut on that one, just take it. But that's rare that actually happens. So you're still going to get some value out of it. It's been enjoying a 96% success rate since the beginning of 2024. So it's doing quite well. And the best for the price. So you can go to our website, DayTradeSPY, you'll see prices on there. And I'm telling you this because we have to have a price on the board. It's kind of like when you check into a hotel. They have their rack rate, and their rack rate might be $800, some ridiculously high. But you're not going to be paying that. All right. Now, maybe I shouldn't be telling you this. Maybe it is, maybe it isn't. So you're going to get your discounts, right? And you're going to get, the current market rate, which could be $300. And so what I'm going to do here is, so I'm going to suggest that you just go contact customer service for the current discount pricing on that. Okay. All right. So that's, I think, really important. And for all of our products, contact customer service to see what's your special on the DayTradeSPY signal. All right. We also have other services. Which is, of course, the trading room. We talk a lot about this. 9:20 to 10:30 daily, hosted by Aaron and myself. And together we've got over 40 years combined trading experience. Fully narrated. We talk about market conditions, forecasted price action. This is where our signature strategies come alive. These are interactive sessions. We answer your questions and comments. It's an enjoyable, friendly kind of a casual environment. We teach. We also have fun. We trade. We have fun. And you might as well earn while you learn. That's the way we look at it. These are also recorded for later review. So as a member of the trading room, you're also going to have access to the recordings afterwards. And I think they go back kind of indefinitely. Again, contact customer service for current discounted pricing. The other I want to tell you about here is the Inner Circle. And this is the very first service that we had introduced 50 years ago. And I'm going to just run this here down. And what I'm going to do is I'm going to just stop. I'm going to just put my video on pause, and I'm going to pause myself for about 20 seconds because you might hear my dog barking in the background. She's outside, has to come in, and if I don't let her in, she's going to bark approximately once every 10 seconds. She has me well trained, my dog Lucy. You'll see a picture of her in a bit. Anyway, I'll be right back, folks. Anybody here? Okay, thanks for your patience on that. It's almost embarrassing. All right, gang. All right, so Inner Circle, get your morning market assessment. Find out our opinions. Aaron and I, we discuss what's going to happen for the day. Plus, you get a follow-up report later in the day. You have the weekly meetups at 8 o'clock on Tuesdays. And that's an opportunity for you to ask any questions. We talk about anything and everything to do with SPY. Again, enjoyable, friendly, casual atmosphere, and earn while you learn. Record it for later review. You'll get the recording after the webinar. All right. Again, contact customer service for the current special on that. We also have the pick of the day, another very popular program. And I'm just a little out of breath from running up and down 2 flights of stairs. Pick of the day, our hand-selected options that Aaron and I discuss before the market opens. We determine the probability of which direction the market's going to go. Now, we did miss the mark the other day. We thought it was going to go up on NVIDIA with the earnings, and the market brought up the whole sector and everything that we looked at. All right, both Aaron and I, we have separate programs that we look at here, and it pushed up, and what happened was the market had a different idea. So it turned out that puts was the way to go, but we do have suggest a 40% stop loss in that particular trade. So hopefully people didn't lose too much. The astute person would have been watching it, and as we were getting into the trading room, we did discuss, not sure I want to take this trade. So, but anyway, we aim for a 6% target on this on the pick of the day here. Greater potential for those, again, who track our indicators. And you can hold this overnight if necessary. And if you insist, like I say, use a 40% stop loss, ideal for those unable to watch the markets all day. And you just want to set it and forget it. A lot of times you can get your profit the next day or maybe the day after. So there's a lot of time built into the pick of the day as well. The pick is currently enjoying a 93% success rate for the year 2024. And again, contact customer service for the current pricing on this. All right, so now let's get into some questions. And I'm not sure there's no password, so I'm going to remove this thing. I thought that was off. I don't know why that's on there, so let's cut that. All right, any questions? Let's get to the questions. All right, because I don't want to keep you all night here either. I know that it's holiday weekend, and you probably maybe get some friends over and kind of enjoying some social time. So, all right, okay. So let me get to some of these questions here. All right, how long should one wait for the trade to turn in your favor? 10, 15 minutes too long? I would say it should turn in your favor fairly quickly, usually in a couple of minutes, Rob. If you're waiting 10, 15 minutes, say on something like the pick of the day, then maybe you should, reassess at that point, say, and it could. I mean, we've had several days in the last little while where it was, 6 or 7, 8 minutes. And then of course it came to deliver. You have to, I think if you're in the trading room, you're going to see where we identify those support resistance levels and the various retracement levels. So if you analyze that in with us and you see, okay, well, I'm going to wait. If we get the bounce off the 50%, whatever goes back up, okay, I will wait until that happens. So that's why I encourage the trading room a lot as well. I had one gentleman on the weekend, he was very disappointed because he thought the pick of the day you just you just buy it and put it for sale. But I guess what I'm trying to say is he was trying to use that program, instead of thinking about it and following the rules, if you'll just automatically get in and didn't really give any thought. I mean, ideally, you want to kind of look at the market and see, are we in line? Because when we send that out at 9 o'clock, markets can and do change between 9 and 9:30, right? But if the market is really turned on you, then just wait until that turns around. So if he got, let's say the pick was a call, and he would just jump right in without actually looking and see which way is the pressure. And we tell you in the rules, if the pressure is going against you, wait until the pressure turns back to the upside on that particular trade. So what he would do is as soon as it opened, he would jump right in with some calls while the market was going down, down, down. Well, hang on a second. If the market is going down, you'll want to wait until it comes back up and you see the pressure pushing back to the upside. Then you're going to get in, right? And that's what you want to do. So he wasn't really uh, doing it the right way, although he swore up and down that he was, but he really wasn't. Hmm. Next question here. Okay. All right, Mike, you ended up getting spam. Okay, it's okay. You got a lot of emails from Eagle. Still not receiving yours. Okay, I will tell them that to get our so I think what may have happened. So Mike G here, he told us that he tried to sign on or something to get a newsletter. But he's not getting it. So quite possibly what happened was I think when you get on there, you're going to get some other newsletters as well. And you may have unsubscribed from everything or something, which is why you're not getting it. So what I'm going to do is I'm going to email them with your comments and say just send him spy on the market. Send him spy on the market. Okay. Okay. Right. Okay. All right. Just kind of give me a second here. Okay. Okay, Don, really interesting, strange situation here. Kind of going through some of these comments here, and if there's something I can kind of help you with, I will. I placed a sell limit order on SPY, the 531 strikes to close at 775. Realized I had not placed a stop on the position. When I placed a 40% stop on it, it was closed out when it reached the stop and it was sold. However, the original trade to close at 775 still shows as a working order. What's going on here? I thought the original order would be canceled once the stop was met. Who wrote that? That was Don R. Don, can you take a look? I'm afraid you may have. I don't know. I'm hoping you didn't, but I'm wondering if you maybe bought another option on that trade with the stop that had closed, but your original order is still up there. So you may be sitting on another, option or, you know, set of options or whatever you have there. If you bought 10, you might have bought another 10. So take a look and go through your monitor tab and see how many you're holding. You might still be holding some. And hopefully tomorrow or Tuesday it'll come back in your direction. So right. Okay, Mark J here. I put 25% of my trade account into DayTradeSPY. My trade account is 1% of my total financial assets. All right, I would be comfortable putting more into it, but not sure what is considered a safe amount. Any thoughts? Okay, that's interesting. I put a quarter of my trade account into DayTradeSPY. Thank you for that. My trade account is 1% of my total financial assets. I'd be comfortable putting more into it, but not sure what is considered a safe amount. Any thoughts? Mark, I like your money management technique. The rule of thumb, never put more than you can afford to lose. And I like the fact you're actually actively trading 1% of your total financial assets. You don't want to put everything you have, your whole lifelong thing into an options trade. I cringe when people say, I got $35,000 and it's all in this option trade and it better work or else. And um, I mean, I have told people, listen, this is not for you. If you're going to do that, I'm gonna tell you, I don't want to have anything to do with it. It's not a matter of if, but just when something horrible happens and you get spooked out, or it goes against you, or you make a mistake, or if you're not 100% on it, even when you are, there's the outlier trades. There's a lot of things that can go wrong in this business, right? So money management is key. I like that money management. What you consider safe. So what I would do there, Mark, is I would ramp it up a little bit, right? And then trade. So let's say that amount that you're talking about is 20,000. I don't know. I'm just throwing numbers out there. And let's say you made another 10,000. Well, maybe put a little more and a little more, and just kind of keep trading the money that you're making in your trading account. I know some people who have done extremely well with that. They built it up and they're trading 80, $100,000. Like that's that's in their account. That's not how much they're trading, but they started out with maybe 10, 20,000. They built it up to 80 or 100,000. And so they can afford to trade more, but that's not their whole asset. So actually that's a pretty cool money management technique that you have in there. You don't want to go crazy and put more that you can't afford to lose. All right. Any idea on the 533 calls from last Thursday? Well, I don't know, but I suspect the market might be going up on Tuesday. We're going to wait and see what happens. Let's take a look at SPY. Let's see, just curious to see. Currently, the futures are down, not a lot. But as I mentioned earlier, the long-term, what's it called? The seasonals had a 3-point rise in the coming week. So whether it happens again, I don't know. I can't tell you that. So all right. Thank you for that, Mike Vag. Your charts are crisp and sharp. Thank you so much for that. I'm glad you're enjoying it. All right. And let me see what other questions. Again, it's 9 o'clock, so I don't want to keep you too long, maybe another couple of minutes. All right. Those Friday trades I had, they were all calls. They were all calls. I like to trade to the upside. I get a little nervous going to the downside. Yes, I make a lot of money to the downside, but I know for a fact that there's going to be support found somewhere. And I'd hate to find that support, and I'm sitting in puts, and I'm not, and I'm sitting in a losing trade. Now the market starts going up. So I like to wait. If the market is going down and I've got the bias with calls, right? I like to wait until we bounce off that support. Maybe go up a little bit, get the dead cat bounce out of the way. It comes back down, find some support, goes back up, breaks resistance, and then I get in and I make a ton of money doing that. Okay, it's kind of a cool little strategy that we use all the time in the trading room. All right. Did you also trade the pick of the day or just more aggressive ones on Friday? I don't remember what I was trading myself. Probably the pick of the day on Friday. And I do get aggressive. So on my own trading, same day trades, I will get aggressive. Okay. If I feel that I'm at one with the market, I've got a really good, a lot of clarity on where the market is going to go, then I don't mind taking a higher risk. Okay. But I also understand the risk. A lot of people like to just hook their wagon on ours and they trade along with us. Now, I don't like to lose and I don't want to fall over the cliff, but I really don't want you falling on top of me. So that's where you have to be responsible for all your own trades and just trade what you can afford to trade. If you can't afford to lose your $5,000, then don't trade the $5,000. Not that you were looking to lose it. We're not, but be very careful. Just be very careful. That's what I'm trying to say here. All right. Okay. All right. Question here. How can I get around the day trade 4 days out, a 5 day problem with Schwab? So I think you're talking here, Leo, about the 25K pattern day trade rule. There's this thing called the pattern day trade rule, which tells you that unless you have 25,000 in your account, you can only trade, 3 times round trip in a 5 day period. So a way around that is either put in 25,000 in your account. You don't have to trade that. Just put that in your account or get a cash account. And I'm guessing that Schwab should just give you a cash account. I'm pretty sure. I don't know for a fact, but ask them. In which case you can trade all you want as long as you have your funds there. Okay. So if you have the funds there, you should be okay with that. All right. And then you can trade as much as you want. Now, bear in mind that when you trade and you make some money in a cash account, that it doesn't settle until the next day. All right. So you are going to be, you're going to have that day. So in other words, let's say you have $5,000 and you trade it and you made $500, you cannot trade that $500 until the following day until it has settled. Okay. What system do you use for entering and exiting your personal trades you mentioned earlier? Basically the same system I use when I show you in the trading room. I get in on those indicators, right? But I'm just tightening it up and I will get a little aggressive and both getting in earlier because I can see, I guess I'm a little more visionary. I can kind of see where it's going to go. And I will take a little more aggressive stance, maybe the same day trades on that. So that's how I do that. What's the difference between the pick of the day and the signal? I get that asked a lot too. Thanks for that, John. So the signal goes on your cell phone and email, and it could be at any time during the day, although usually it's in the mornings, 3 to 5 times a week. It's also reflected in the cost. So as soon as you get it, you buy it right away. And it could come at 10:30, could come at 10 o'clock, could come at any time, all right? 9:47, whatever. And you're gonna buy this right away, put up for sale for 5%. If it does not execute the same day, you're gonna sell it at the market close. Sell it at the market close. Pick of the day, Aaron and I, so the signal is off an algorithm. All right, so that's a computerized algorithm. I don't know what that signal is going to be. I get it at the same time you do. The same time you do. Um, in fact, you'll probably see it before me because I'm usually in the trading room, focused on narrating the trading room. So I'm not looking at my email or my cell phone, right? So you'll probably see it before I will. The pick of the day, Aaron and I actually manually look at it and we determine is it going to go up or down today. We send it out at just after 9 o'clock. And that is designed to, if you need to hold it overnight, you can. You can. We're shooting for a 6% gain in that, and we're looking for a 40% stop loss on that for anybody who is new online and maybe they're not comfortable with holding it for a possible longer drop. Okay, that's kind of the difference there. Again, check with with customer service as to the pricing of all of these services. Ask them, tell them what you're interested in. Ask them for the current special on that product or service, and they will give you a special price. All right. Okay, what are you talking about when tracking the trade using our system? What does that mean? Okay, like so if you're in our trading room, I will tell you things like, okay, track the EMAs on and again, I'm not teaching you here, I'm not giving you the keys to the castle here, but we have ways of tracking it up and we'll give you the longer term projections that we might see here for the rest of the day and where we see the stock going. And that's kind of what we're talking about, whether it's chart patterns or using the Fibonacci retracements, Andrews pitchfork, all these various techniques that we use. So that's where we analyze before we end up the day here at 10:30 in the trading room, and that's what we do to analyze. So if you see that the market's going to probably go up to here, stay with it until it gets up to that direction, pick up a few more cents. So, all right, okay. I'm kind of quickly scanning through some of these things. Okay. Okay, thank you so much for that. Thank you, Mark. Mark P. I'm thankful for your explanation on volatility. Look back on last week. I really want to make learning from you and Aaron my main goal going forward and learn how to do this full time. Thank you. Have a blessed Memorial Day. Thank you, you too. And it's 9:07, another couple minutes and we're out of here. All right. How do you place an order to sell after a 6% gain and sell after 40% stop loss at the same time? Once I place an order to sell, I cannot place a second order. Okay, so no, you don't place. Okay, so if you are looking to get, so you want an OCO, one cancels the other. And in our trading room, we can show you that. All right, we can show you that. I believe I might even be able to show you. I don't know if you're using Thinkorswim or not, Richard. I don't want to spend a lot of time on this, but let's say you have a trade here. I think if I can buy this here, buys, one cancels the other. I think it's a custom. Here it is. Buy custom with an OCO bracket. And you're going to want to make the adjustment down here. And again, I don't want to go through this right here because I am pressed for time. And these are things that we'll probably discuss in the trading room if you're in there. But you have a one cancels the other. So in other words, you're going to have a 6% gain on the one, but if it drops 40%, then you'll go that path, right? The other way to do that is, let me go back to this here. The other way to do that is simply monitor it. Now, don't wait until it hits 40% in the sell it because sometimes it's going to go through the 40 to 42% just like that. Or if you're pushing 35, 38%, you know what? I don't like the way this is going right now. If you're feeling uncomfortable with it. Myself, I don't use stop losses. I have other ways of managing my trades, but that's not what I prefer. But we do have to put something in there for people who are just blindly following along. I noticed that a lot of times what will happen is if I don't tell you what I'm doing and you just kind of stay with it until it goes to zero. So we don't want that. So we have that contingency set up in there. So Roger S, when's the next 2 to 10K challenge? We'll probably be talking about that next month or two. We just kind of want to see how we're going to make that so that we can actually a little more conducive to the way we do things in the trading room. So we had a couple suggestions on that. We're just kind of mulling that over right now. Right. Okay. And what happens if one places a buy call order on Thinkorswim before the main market opens, like at 9:15, when it seems like the options are much cheaper? Will the order be placed at 9:30 when the market opens? Okay, so I like to use limit orders, and I like to use in the market, the options market does not open until 9:30. All right, 9:30. So if you have an order in, you may get filled at whatever the market is. Don't use a market order, folks. You always use a limit order. Always know the best, and your option price is probably going to be different than what you're seeing at 9:15. Okay, what you're seeing at 9:15 is actually left over from the day before. At 9:30, that's when the new option prices all populate. So that's what you want to do. You want to wait until 9:30 when you get that option price that's showing the current price. And that's probably going to be a little bit different. So wait until 9:30. Always use a limit order and do it that way. So, all right. Thank you for that, guys. Okay, let's see. Can one place an order before the market opens? You may be able to place an order before the market opens, but if you have a market order, you might get filled at a bad price. All right. A market order is a negotiated price. You don't want to go into with a market order. You don't want the market telling you what they're going to pay you for the option of what they're going to charge you. You wouldn't open your wallet to some stranger out there. When you hear, just dig in, help yourself. Why would you do that with this, right? You see, market makers can see the orders up there with the level 3 or 4 or whatever they have. They can see all these different orders. If they see an order down there, oh, I think you're going to grab that guy's order for really cheap. His loss, right? They don't care about you. Don't think it. No, nobody cares about you in the stock market. Nobody knows you. Nobody cares about it. They just want your money, right? So if you use a market order, you're begging for trouble. In all likelihood, you'll get filled somewhere between the bid and the ask. But if it's a market order that you're putting in before the market opens, you could be in you could be in line for spending more money than what your option is worth. So. All right, and I believe there's an OCO with Tasty as well. Folks, at this, I'm going to just call it a day. Have a very good Memorial Day. When I know you're probably looking at getting back into party mode here as we head into the weekend. So it's been a pleasure, ladies and gentlemen. We'll see you Tuesday morning, hopefully in the trading room. Inner Circle every day, and get the signal, folks. Get the signal 3 to 5 times a week. You're given a 5% gain. I mean, it just works incredibly well. Have a good night, folks.
Give it all to you and trust the process and keep your eyes on the prize. I can tell you what